Hello students, how are you all? I hope you are doing well. In this video, we are going to learn CMA Inter Financial Accounting MCQs students. Here, these are the MCQs provided by ICMAI officially. We have total 144 MCQs students. These MCQs will help you to score minimum 20 marks. So hope you enjoy this video. Now, we enter into the video without wasting much time. Okay, first one. Which of the following is not a method of charging depreciation? We have so many methods of charging depreciation. Out of them, they are asking which is not a method of charging depreciation. Sinking fund method, yes, it is a method of depreciation. Sum of years digit method, it is also method of depreciation. Working hours method, it is also method of depreciation. Asset life cycle method, it is not a method of depreciation. They are asking which is not a method of depreciation. Yes or no, students? Next one. Second, a resource owned by a business with purpose of using it for generating future profit is known as asset. Na? So capital, no. Asset, yes. It's not a liability and it's not a surplus. Asset is owned by the business for the purpose of using it in the business and generating revenue for the business. Next one. Outward invoice issued as a source document. Outward invoice, nothing but whenever we sell goods, we issue invoice to the customers. It is called outward invoice. It is a source document to enter the transaction in sales book. So purchase book, no, yes, sales book. Not returns inward and not returns outward. Purchase book, inward invoice, returns inward book, credit note. Return inward means sales returns, no. So we use credit notes to enter the transaction in returns inward. Returns outward, purchase returns, we use debit notes. Yes or no, students? Yes. Next one. Fourth one. Which of the following is of capital nature? Capital nature may be capital expenditure or capital revenue. Purchase of commission on purchase, it is revenue. Cost of repairs, it is also revenue. Rent of factory, it is also revenue expenditure. Wages paid for installation of machinery, it is capital expenditure. But wages paid for installation of machinery must be capitalized. So this is capital expenditure. Next one. Which of the following is not a fundamental accounting assumption? We have three fundamental accounting assumptions: going concern, consistency, and accrual. So apart from these three, remaining all are not fundamental accounting assumptions. Okay, fine. One, going concern, yes, it is fundamental accounting assumption. Consistency, accrual also. Materiality is not fundamental accounting assumption. They are asking which is not a fundamental accounting assumption. Next one, sixth one. An obligation means we have to pay, which may or may not materialize is an contingent liability. Yes, no, students? Yes. Loss, no. Asset, no. Contingent liability, yes. Next one. Which of the following is an example of capital expenditure? Capital expenditure, out of the expenditure, if you get benefit for more than 1 year, it is capital expenditure. Inventory of raw material, work in progress, finished goods. These are revenue expenditure. Insurance premium, revenue expense. Taxes and legal charges, revenue expense. None of the above is your correct answer. Eighth one. Dash is specially suited to mines, oil wells, quarries, sandpits, and similar assets of wasting character. In case of wasting assets, generally we use depletion method of providing depreciation. So which one is correct? Depletion. Option A is correct. Next one. Which of the following account has credit balance? Generally, which type of accounts has credit balance? Capital, revenue accounts. Yes or no, students? Look at plant and machinery debit balance, loans credit balance, purchases debit balance. None of the above. No. So loan account has credit balance. Next one. Which of the following is or revenue expenditure? Revenue expenditure. Out of the expenditure, if you get benefit within a period of 12 months, is revenue expenditure. So they are asking which of the following is revenue expenditure. Consumable stores, yes, revenue expenditure. Taxes and legal expenses, revenue expenditure. Rent of factory building, revenue expenditure. All of the above, yes. So option 4 is correct. Next, 11th one. Which of the following purpose is served from the preparation of trial balance? So generally trial balance is prepared to check the arithmetical accuracy. Yes, whether all debit account balances are equal to credit account balances. So we will prepare trial balance, and trial balance also helps us to in the preparation of financial statements. Next. So read one by one. To check the arithmetical accuracy of the validate transaction? Yes. To ascertain the balance of any ledger account? Yes. To facilitate the preparation of final accounts promptly? Yes. All of the above. So all of the above option is correct. Next one, 12th one. Basic principles of concept is that business is assumed to exist for an identified period. So which concept is going concern concept? Yes or no, students? So first option is correct. Business entity, business is different and owner is different. Money measurement, only money, the transactions are measured in terms of money we will recognize in the books of accounts. Okay, fine. 13th one. Purchase of a laptop for office use. Purchase of laptop is asset na, for office use. Wrongly debited to purchase account. So instead of debiting electronic item, that means laptops, computers, they debit purchase account. So this is the error of principle na. Yes. So omission no, commission no, principle yes. So option C is the correct option. Next one, 14th one. Which of the following book is both journal and ledger? Yes, this answer you can write quickly. Cash book na? Oh, cash book. Cash book is a subsidiary book as well as principal book. Why? Because in the cash book we enter the cash transaction. Whenever cash transaction happens, we immediately enter the transaction cash book. You do not to post them into cash account or bank account. Clear? Next one, 15th. Original cost of machine 1,50,000. Okay. Residual value 10,000. Okay. If depreciation is charged 10% per annum under WDV method, then depreciation for third year first. You get 1 lakh minus 10% first year, minus 10% second year, minus 10% third year. So they are asking depreciation for third year will be okay. Fine. So 1 lakh minus 10%. First year depreciation over minus 10%. Second year depreciation completed. On the you calculate 10% now. 30,490. 10% per annum under WDV now. Yes, look at then depreciation will be yes. 1.5 lakh is asset cost minus 10% depreciation first year. So that we get 1,30,000. In a second year depreciation, we get 121,500 into 10%. So that we get 12,150 is the third year depreciation. Clear, students? Next one. Cost of machine B 90,000. Excess expenses incurred at the time of purchase to be capitalized 10,000. Total what is the asset cost? 1 lakh. Estimated residual value of machine B 20,000. Okay. Expected useful life 8 years. Compute the amount of depreciation under SLM method. Under SLM method, how do we calculate? Simple. Cost of the asset 1 lakh minus what is scrap value 20,000 divided by useful life 8 years. So 10,000 is the correct. 1 lakh the asset value, 20,000 is the residual value, remaining amount 80,000 divided by life 8 years. Next one. Capital on 1/1/2023 24,000 opening capital. Capital on 31st 12 2023 closing capital is 12,000. Profit or loss during the year 6,000. Profits if the amount is in brackets then it is lost. And fresh capital contributed 1,200. Then the amount of drawings will be drawings they are asking to get to calculate closing stock. We have a formula now. Closing capital is equal to opening capital less profit minus drawing. This is the formula we use to calculate closing capital. Now here we have closing capital. So drawings we need, so that opening capital 24,000 less profit 6,000 minus closing capital 12,000. And here also we add additional capital. So 24,000 less additional capital 12,000 less profit 1,000. 24 less 1,200 plus profit 6,000 minus closing capital 12,000. So drawings are 19,200. Drawings are 19,200. Is clear, students? Next one. 18. Journal entry of wages 10,000 paid for installation of machinery. Wages paid for installation of machinery must be capitalized. So what is the entry we record? Plant and machinery account debit to cash or bank account. Yes or no? So debit machinery account and credit cash account with 10,000. Students, clear? So option B correct. 19. Credit balance of nominal account shows. Credit balance of a nominal account is nothing but revenue, no? Revenue. Expenses of business, no. Loss in the business, no. These two show debit balance. Income in the business, yes. Assets of business shows debit balance. Next one, 20th. Which of the following will be recorded as contra entry in cash book? Only two transactions are entered as contra entry in the cash book. First one, cash deposited into bank. Next one, cash withdrawn from bank. You get 1000 withdrawn from bank for personal use. It is treated as drawing. Check of 2000 received from Mr. X lodged into bank on the same day. In this case, we debit bank account now. Yes. Check of 3000 received before from Mr. Y and now lodged into bank. Yes. The time of receipt of check, we debit cash account. Now at the time of depositing the same check into bank on different day, then we treat it as deposit of cash. So option 3 is correct. Option 4, look at a customer directly deposited. No. Here also we debit bank account. Third one, we treat it as contra entry. 21st. Goods purchased costing 60,000 and cash paid 45,000 after receipt of a cash discount of 9,000. We purchased goods 60,000. Cash paid 45 after a receipt of 9,000. What is the percentage of trade discount? Look at students. So total 60,000 is the purchase of goods minus 45,000 and 9,000, 54,000. So 54,000 cash paid minus discount received 9,000. So difference 6,000 is nothing but trade discount. This difference of 6,000 is nothing but trade discount. So percentage they are asking, not trade discount, percentage. So trade discount divided by goods costing 60,000. So 10%. Yes or no, students? Next one. So option B correct. 22nd. Which of the following errors is an error of omission? Error of omission may be complete omission. Completely we forgot to record the transaction, or sometimes we forget to post from subsidiary books into from subsidiary books to ledger. So these are considered as error of omission. Partial omission, complete omission. Sale 5,000 written in the purchase journal. It is already written, na? Yes. Wages paid to Sham debited to his account is posted. The total of sales journal has not been posted to the sales account. Yes. It is partial omission, student. Here sale 5,000 written in the purchase journal. Error of this is a error. Wages paid to Sham debited to his account. It is also error. Okay, principal error. But it is not error of commission. But here look at total of the sales journal has not been posted to the sales account. Actually, the total of sales journal must be posted to the credit side of sales account. But here they forgot to post. So it is partial omission. So option C correct. Third, a credit sale of goods to Amir worth 600 was recorded in the purchase book. Actually, we sold goods to Amir, but they have recorded in purchase book. The rectification will be. Now, how do you rectify it? Simple. Purchase account is now debited. Now debit. Purchase account debit. Purchase account debit. How much? 600. Sorry, credit sale of goods to Amir, na? Right. So, Amir account debit to earlier by mistake purchase account written. Now purchase cancel. 600. Earlier sales account is not credited. So, by sales 600. Amir account 1200. Yes or no? Now get Amir will be debited 600. Amir will be debited with 1200 rupees. Amir will be debited with 1200. No? Next purchase will be debited with 600. Already purchase debited with 600 rupees. Amir will be debited with 1200. Yes, it is correct. Amir will be debited with 1200 rupees. Sales will be credited. Yes, sales will be credited, but 600 rupees. So be careful while you are writing this rectification entry. Next one. Purchase of a machinery worth 5,000 was omitted from accounts. We have purchased a machine, but it is not yet entered in the books accounts. The rectification entry will be simple. Now we did purchase account, cash account or bank account credit. So now we debit machinery account, no? Sorry, but now we debit machinery account. Purchase account will be debited? No. Cash account will be credited? Yes. Machinery account will be credited? No. None of the above. No. Option B is correct. Next, goods purchased from A for 2000. If purchased goods from A for 2000 passed through sales book, actually it should be entered in the purchase book. The rectification of this error results in, observe students, actually we have to debit purchase account. How much? 2000. Credit A account. How much? 2000. But by mistake they have entered this into sales book, so that now we debit earlier sales created, now we debit A account created with 4000. This is the entry we got. But they are not asking the rectification entry. What is the effect of this error in the books of accounts? Look at. Earlier purchase account is debited. So purchase account debited means profit decreases. Gross profit decreases. So decrease in gross profit. The gross profit decreases. Yes or no, students? Observe carefully. So here gross profit get decreases. Yes or no, students? Next, 26th. The accommodation bill is drawn. The accommodation bill is drawn for financial needs for two parties. Okay. To get to finance actual purchase or sale of goods. No. To facilitate trade transmission. No. When both parties are in need funds. Yes. When both parties are in need funds, then we draw accommodation bill. Next one. If any stock is taken by a co-venturer, it will be treated as an income of the joint venture, an expense to be ignored from joint venture. It will be treated in the personal books. So it is treated as income of the joint venture. Yes or no, students? Yes. Next one. 28th. Kuntal draws a bill on Sham for 7000 rupees. Okay. Kuntal endorsed it to Ram. So he endorsed it to Ram. Ram endorsed it to Rahim. Now, who is the payee? Ultimately, who is the holder of bill? Rahim. So that Rahim will receive the amount. Payee means the person who receives the amount of bill. So Rahim is eligible to receive the amount. Payee. 29. A and B purchased a piece of land for 30,000 rupees. Okay. And sold it for 60,000 rupees. What is the profit, students? 30,000 rupees is the profit. Originally, A contributed 12,000 and B 8,000. The profit on venture will be 30,000 rupees. Is purchased for 30, sold for 60. So that what is the profit? 30,000. Next one. 30th. Which of the following are the basic features of a joint venture? Look at. The profit or loss on joint venture is shared between the co-venturers in the agreed ratio. Yes. The co-venturers may or may not contribute initial capital. Yes. The joint venture is dissolved once the purpose of the business is over. Yes. So all of the above is correct answer. All the three are features of joint venture. Next one. The person to whom bill is endorsed is known as endorsee. Person to whom the bill is endorsed is known as endorsee. And the person who is endorsing the bill is known as endorser. Yes or no, students? Next. 32nd. 32. A and B enter into joint venture, sharing profit and losses in the ratio of 3:2. Fine. A purchased goods costing 2 lakhs. B sold 95% of the goods, 2,50,000. A is entitled to get commission 1% commission on purchase, and B is entitled to get 5% commission on sales. Okay. A drew a bill on B for an amount equivalent to 80% of original stock of goods. A got it discounted for 1,50,000. What is A's share of profit? Here they are asking what is A's share of profit. So, yes, observe students. Here we prepare a small joint venture account. Here goods purchased, it is becomes cost, and he sold goods for 2.5 lakh. Okay. Next, A is entitled to get 1% commission on purchase. What is the purchase value? 2 lakhs. So 2,000 is the commission. Next, B is entitled to get 5% commission on sales. Sales are 2,50,000 into 5%, 12,500. Remaining we will not consider into this joint venture account. So 2.5 lakh into minus 2 lakhs minus 2,000 minus 12,500. 35,500 is the profit. On that 3 by 5 is the share. So A will get total 21,300 students. So option B correct. Next one. 33. Which of the following commission is allowed by the consignor to the consignee to encourage the consignee to putting hard work for introducing a new product? Generally, we pay three types of commission to the consignee. One is normal commission, second one is overriding calculator commission, third one is overriding commission. Overriding commission is paid to the consignee for doing more hard work to introduce the product. So, overriding commission is the correct answer. Next one, 34. X draws a bill on Y for 1,80,000 for mutual accommodation in the ratio of 2 is to 1. X got it discounted for 169 200 and remitted one third of the proceeds to Y. So, how the bill is shared? 2 is to 1 ratio. So, 1,20,000 for X and 50,000 for Y. The discount also shared in this ratio. How much money should be remitted by X to Y at the time of maturity as to enable Y to honor the bill? 1,20,000 na? Simple. So 1,20,000 is taken by X including discount. 60,000 is taken by Y including discount. So how much amount X will remit to Y to honor the bill? 1,20,000. So option A correct. Next one, 35. Raju draws a bill on Sampath on 25th October 2021 for 90 days. The maturity date of the bill will be, what is the duration of the bill? 90 days. So 90 plus 3 days grace na. So total 93 days. Total 93 days. Now in October we have more 6 days. October, November we have more 30 days. December we have more 31 days. Now deduct, students. So 93 minus 37, 67 days. So we get 26. So December gone. So 26th January is the due date of the bill. But 26th January is the public day. So that public holiday. So when due date is a public holiday, take it as preceding day as due date. So 25th January is the due date of the bill. Is it clear, students? Next one, 36. Which class of account is a contingent account? Contingent account. See, personal account, real account, representative personal account, nominal account. Observe, students. So which type of account it is, students? So it is a nominal account. Okay. Next one, 37. On dishonor of a bill of exchange that has been discounted. On dishonor of a bill of exchange that has been discounted, noting charges are initially paid. Generally, who will pay noting charges? Generally, first, the holder of the bill. Now the bill is discounted. So who is the holder of bill? Bank. So who will pay noting charges? Initially, bank. Bank will recover from the person who discounted this bill, and the person who discounted the bill will recover the noting charges from the previous person. So like that, ultimately who will bear these noting charges? Roy. Next, 38th. Miss V draws a genuine trade bill of 25,000 for 6 months on Mr. A. After holding the bill for 1.5 months, what's the bill time left? 4.5 months. As a result of expected requirement of cash, he immediately discounts the bill to the bank at 10% per annum. The amount of discount will be simple. What is the amount here? 25,000. Time period left 4.5 months. Because 6 months is the bill duration, 1.5 months gone. So 4.5, rate of interest is 10%. Calculate. 25,000 into 4.5, 12 into 10%. How much, student? 937.5. Is it clear? Next one, 39. On January 1st, 2020, Mr. H drew a 6 months bill on Mr. H for 15,000. For mutual accommodation, the bill was duly accepted by Mr. H. Mr. H discounted the bill on the same day with a bank at 10% per annum. Okay. Remitted one third proceed to H. The discount to be borne by Mr. H. Mr. S drew na? Yes. So first of all, calculate the discount. So here the amount is 15,000 into time period is months. 6 by 12 rate of interest 10%. So how much we get? 15,000 into 10% into 6 by 12. We get 7,500. Sorry, just a minute. 750. 15,000 into 10% into 6 by 12. 750. So out of 750, what is Mr. S say? Remitted to, yeah, one third proceeds to H. That means two third proceeds are taken by, yes. So S will bear interest 500. Because two-third procedure taken by A. No? Next one. 40. A pro forma invoice is sent by. Then the pro forma invoice is sent by whom? Consignor to consignee to tell to the consignee the description of the goods, quantity, rate, all those things. Sir, no? So consignor to consignee. Pro forma invoice. Is it clear, students? Account sales is sent by consignee to consignor. 41. The nature of consignment account and consignee account will be. The nature of consignment account is nothing but nominal account nature and consignee account to personal account. So nominal and personal respectively. Consignment nominal account, na? Consign, because through consignment account we calculate profit. 42. K of Kolkata sends out 400 bags of jute to T of Tamil Nadu costing 200 each. Okay. Consignor expenses 2000. Wise non-selling expenses is 2000 and selling expenses 1000. Means recurring and non-recurring. Non-recurring 2000. Recurring 1000. 300 bags were sold by Y. Now how many bags left? 100 bags. Now they are asking value of consignment. Simple. 100 bags left. 100 bags into each bag costs 200. That comes around 20,000 rupees. Now here we have to add consignors non-recurring expenses. Consignor incurred 2,000 rupees in 4 bags. So on 2,000 rupees on 400 bags. Now on 100 bags how much? 100 by 400. So it is 500 rupees. Now consignee also incurred 2,000 rupees expenses, na? So same 500 rupees. Plus 2,000 into total incurred 400 bags. 100 bags left. So 500. Total 21,000. So 21,000 is your answer, students. So don't add selling expenses. Don't add selling expenses. Is it clear, everybody? Yes, that's it. Next one. 43. Goods will be sent on consignment at invoice price, okay, which is 20% above cost. 20% above cost means 1 by 5 on cost equal to 1 by 6 on sales. Yes or no? 1/5 of the goods costing 60,000 were damaged in transit. 1/5 of the goods costing 60,000 were damaged in transit. Find out the invoice price of the goods sent on consignment. First, calculate 1/5 of the goods costing 60,000. Full value of goods calculate. So 60,000 into 5, 3 lakhs. 3 lakhs is the cost of goods have sent at invoice price. Now invoice price will be 20% above cost. So 3 lakhs plus 20%. 60,000 is the value of goods. Observe, students. Yes or no? Next one. 44. X of Kolkata sends out 100 boxes to Y of Delhi cost 200. Consignor expenses 4,000. Consignee expenses non-selling. Non-selling means non-recurring expenses. And selling 500. 1/10 of the boxes were lost in transit. 1/10 of the boxes were lost in transit. So how many boxes? 10 boxes lost in transit. How many boxes received by consignee? 90 boxes. 2/3 of the boxes received by consignee were sold. Now you people tell me, total we have sent 100 boxes. Out of that, 10 boxes lost. 10 boxes lost. So how many boxes left? 90. So out of that, he sold 2/3. 60 boxes sold. How many boxes left? 30. This is our consignment stock. Yes or no, students? The amount of consignment stock will be simple. Now 30 boxes left into each box cost 200. That comes around 6,000 rupees. Plus consignor expenses how much? 4,000 rupees. Expenses 4,000 on 100. Now on 30 how much? So 1,200 rupees. Consignee non-recurring expenses. Here while you are calculating consignee non-recurring expenses, be careful. Why? Because here consignee incurred non-recurring expenses on 90 boxes only. Because the boxes were lost in transit. How many boxes received by consignee? 90 boxes. So 90 boxes. So he incurred 900 rupees on 90 boxes. How many boxes left? 30. So 300 rupees. This is very, very important, students. Total 7,500 is consignment stock. So option B correct. Observe. Is it clear? Next one. 45. A sends out goods costing 2 lakh to B. Okay. Consignor expenses 5,000. Okay. Consignor's expenses in relation to sales 3,000. Fine. 4/5 of goods were sold at 20% above cost. See, total 2 lakhs goods sent. Out of that, how much goods were sold? 4/5. How much? 2 lakhs into 4 by 5. So 1 lakh 60,000 worth of goods sold, costing. So 20% above cost. So plus 20%. So total 1 lakh 92,000 sold, na? Fine. The profit on consignment will be. They're asking profit on consignment. Okay, simple. Look at 1 lakh 92,000 goods sold. Next up, consider expenses in relation to sales 3,000. Goods sent 2 lakhs. Now consider expenses 5,000. Closing stock loss how much, student? 40,000 rupees less. Consider expenses 5,000, na? So 5,000 out of that 1/4 is gone. Okay. So 5,000 rupees, 1,000 rupees. Total 41,000 rupees closing stock. 41. Okay. Like 92 plus 41 minus 3,000 minus plus minus 5,000. So the profit will be 25,000. Student, profit will be 25,000. Is it clear? Next one, 46. X of Kolkata sends out 10 goods at cost plus 25%. Let us say cost is 100, profit will be 25. Then what is the invoice price of goods? 125. Invoice value of the goods sends out 2 lakhs. Invoice value of goods sends out 2 lakhs. Fine. 4/5 of the goods were sold by consignee at 1,76,000. Observe, the invoice price of goods, the invoice price of goods 2 lakhs. Out of them he sold 4/5, means 1,60,000. This is the sale value, invoice price of goods sold. But he sold it for how much? 1,76,000. 1,60,000 worth of invoice price of goods he sold for 1,76,000 rupees. Okay. Commission 2% up to invoice value. Calculate 1,60,000 into 2%. So 3,200. And 10% of any surplus above invoice value. What is the surplus amount? 1,76 minus 1,60,000. So 16,000 rupees. 16,000 rupees into 10%. 100. So 4,800 is your commission. Commission payable to consignee 4,800. What calculation? Next one, 47. X of Kolkata sends out goods costing 1 lakh. Costing 1 lakh to Y of Delhi. Fine. 3/5 of the goods were sold by consignee for 70,000. Normally, what is the cost of goods sold? 60,000 rupees. 3/5. Sorry, just a minute. Yeah, 3/5, 60,000 rupees. But he sold it for 70,000 rupees. Fine. Commission exceeds cost price. Commission exceeds cost price. The amount of commission will be, some information is missing, students, here, because how to calculate commission we didn't know that, we treated as invalid question. Next one, 40. If you know the answer, you can send in a comment section, because I think it is incomplete information. Next, any account sale is sent by consignee to consignor. Yes, no? Is the periodical summary statement sent by consignee to consignor? So consignor, consignee, no, consignee, consignor. Yes, B option is correct. Next one, 49. Account sales. Account sale contains which information? Goods sold by consignee, expenses incurred by consignee, amount sent by consignee. All this information contains in account sales. Okay, account sales is have a particular format? No. Does not have a particular specific format? Yes. Must be prepared by law? No. Given by consignor to consignee? No. Does not have a specific format. Account sales does not have a specific format. Next one, 50th. X sends out goods to Y costing 1,50,000 to Y. Okay, costing 1,50,000. Goods are to be sold at a cost of 133 by 3, means 1/3. Then what is the total sale value of goods? 2 lakhs. 150 into 1/3, 50,000 is profit, totals 2 lakhs. The consignor asks consignee to pay an advance for an amount of equivalent to 60% of sale value. What is the sale value, students? 2 lakhs because 150 cost is one third profit 30,000. So 2 lakhs is the same value. Now consignor asked consignee to take some advance 60% of sales. How much? 1 lakh 20. Yeah, correct. 51. Which of these accounts is not a part of double entry system? Which of these accounts are not part of a double entry system? Look at memorandum account. Let us see. Actual memorandum account is not a part of double entry system. Student. Joint bank, yes. Joint venture, yes. Co-venturer, yes. So memorandum account is not part of double entry system. Memorandum account. Next one. A option correct. 52nd. A purchased goods costing 1 lakh. Okay. B sold the goods for 1 lakh 50. What is the profit? 50,000. Sharing ratio should be equal. So 25,000 for A and 25,000 for B. Same set of books is maintained. What will be the final remittance? Same set of books maintained. What will be the final remittance? Look at actually who purchased goods? A. Sold goods? B. Now how much amount B have? Sorry, B has. B has 1 lakh 50,000 rupees. Who sold goods? B. B has 1 lakh 50,000 rupees. What is the profit on venture? Total 50,000. Out of the B's, yeah. Now who hold the amount? B. Okay. 50,000 is deducted by B as his commission. Now remaining final remittance is sent to A 1 lakh 25,000. So B will remit 1 lakh 25,000 to A. Is correct? B sold for 1 lakh 50, profit 50,000 and B will deduct his profit for 25,000. So final remittance 1 lakh 25,000 is sent by B to next one. A and B entered into joint venture agreement to share the profits and losses. 2 to 1. Okay. A supplied 100 radio sets worth 1 lakh to B, incurring expenses 1 lakh 5,000. Okay. For freight and insurance. B sold the 95 radio sets for 1 lakh 20,000. Fine. 5 radio sets were taken over by B. Okay. Profit or loss on venture will be simple. Look at total 100 radios into 1 lakh. 100 radio sets worth 1 lakh. Okay. Total 1 lakh. B incurring expenses 5,000. Okay. 5,000 for freight. So B sold 95 radios for 1 lakh 20,000 rupees. Okay. And 5 radio sets were taken over by B. Now look at this is treated as income for venture. Yes, sir, student. So 1 lakh 20,000 is income for 95 sets and 1 lakh is cost and 5,000 expenses incurred. Now how many radios are taken by B? 5 radios. Each radio cost actually 1 lakh rupee for 100 radios means per radio 1,000 rupees. So 5 radios cost 1,000 equal to 5,000 rupees. Less we add cost. We have incurred 5,000 rupees cost now. 5,000 rupees cost to send 100 radios. So this is also considered. So how many 5 radios total expenses incurred 5,000 into 5 radios by 100. How much, students? 250 rupees. Yes. So total value of goods A and B is 5,250. That is also considered as income. Now calculate. 1,20,000 plus 5,250 minus 5,000. So 20,250 is the profit on venture. 30,250 is the profit on venture. Option. Okay. Next one. 54. 54. A purchased goods costing 40,500. Okay. B sold goods costing 40,000. Okay. At 50,000. Balance goods were taken over by A at 4,000. The profit on venture will be simple. Total 40,000, 4,000, 42,500. Sorry, here 50,000. Fine. 50,000 income less 4,000 goods taken minus 42,500. 11,500 is the profit on venture. 11,500 is the profit on venture. Yes or no, students? Observe. Next one. 50. A purchased 1,000 kgs of rice costing 200 each. 1000 kgs of rice costing 200 each. Carriage 200, insurance 3000. Okay, 4/5 of the boxes were sold. This 4/5 of the rice set. Okay, sold by B at 250 per boxes. It is not box, kgs. Okay. Remaining stock were taken over by B at cost. He has taken over at cost. The amount of stock taken over out of 1000 kgs, 4/5 sold, so 1/5 unsold. 1/5 means 200 kgs. Each is 200 rupees. So cost 40,000. Yes, no students. But this is cost. What about amount spent on sending the goods? What about amount spent on sending the goods? This also should be cost means what? Amount paid for purchase plus additional expenses incurred. Yes. So how much total additional expenses incurred? Observe carefully. 2000 and total 5,000 rupees. 5,000 into 1/5, 1,000. So it is 40,000 plus 1,000 rupees. Total 41,000 worth of goods in buy. So which option? Option B is correct. Next, 56. The party who is ordered to pay the amount is known as the party who is ordered to, yeah, the party who is ordered to pay the amount is known as ultimately drawee, na? Yes, but who is ordered to pay the amount is known as drawee. Is clear, students? Next one. Retirement of a bill. Retirement of a bill means what? Bill is honored before the due date. Retirement of bill is nothing but bill is honored before due date. Look at discounting of a bill. No. Dishonor. No. Renewal. No. Payment made before the due dates. Payment made before due date. Is it clear, students? Next one. X draws a bill on Y for 3,000. Okay. X endorses to Z. Okay. Y will pay the amount of bill to whom the bill is paid. Z, na, endorse. Who is the holder of bill? Z. So to Z amount is paid. Next. X sold goods to Y for 3 lakhs. X sold goods to Y for 3 lakhs. Half of the amount will be received in cash. Okay. 1.5 lakh. And balance through bills receivable. So bill is drawn for 1.5 lakh. For what amount X should draw a bill on Y? Simple, 1.5 lakh. Total 3 lakhs minus half of the amount cash 50, remaining bill 1,50,000. Yes. On 1st April, Mr. A sold goods 10,000 to B and drew a bill for 3 months. Okay, Mr. A discounted the bill with bank 15%. Amount of discount will be 10,000 to 15% into duration is for 3 months. So 10,000 into 15% into 3 by 12, 375. 375. Yes or no, students? One. 61st. At the end of the accounting year, the capital expenditure are shown in the balance sheet. When expenses are closed by transferring to P&L account. Is it clear, students? So assets side of the balance sheet. Capital expenditures are shown on the assets side of the balance sheet. Next one. If average inventory is 1,25,000, average inventory is nothing but what, students? Average inventory is nothing but opening stock plus closing stock divided by 2. Average inventory is equal to opening stock plus closing stock divided by 2. Okay. And closing inventory is 10,000 less than the opening inventory. Here opening average inventory is 1,25,000. Average inventory 1,25,000. Okay. Now what they are giving? Closing inventory is 10,000 less than the opening inventory. Yes. How much is opening inventory? Don't know. So let the opening inventory be X plus closing inventory is 10,000 less than opening inventory. So X minus 10,000. Now solve the equation. So 2x is equal to 2,50,000 minus 10,000 means 2,40,000. X is equal to 1,20,000. 1,20,000 is what? 1,20,000 is what? Opening stock. Now closing stock is, now what is your what is they are asking? What is the closing inventory? Yes, opening inventory 1,20,000. Opening inventory 1,20,000. Closing inventory is 10,000 less than opening inventory, so 1,10,000 rupees. Closing inventory will be, yeah, just a minute. Yes, look at student here. A small mistake happened. How much we get? X plus x, 2x, 2 into 1,25,000, 250 minus 50,000 rupees. We send it out. That's so that we get 2,60,000. Then x is equal to 1,30,000. X is nothing but opening inventory. Closing inventory 10,000 less than opening inventory. So that what is our answer? 1,20,000. Is it clear, students? Next one. Next. 63. As on 31st March 2023, debtors and additional bad debts are 8 lakh 10,000. Debtors 8 lakh and additional bad debts 10,000. So first you deduct 8 lakh minus 10,000 rupees. 7 lakh 90,000 is our debtors respectively. If the provision for bad debts is 5% on debtors, so 5%, how much it is? 39,500. That is our provision. Next, 64. Income and expenditure account is a nominal account. Income and expenditure account is a nominal account. Simple. Receipts and payments account is a real account because it is real account in nature. Next, income statement of a charitable institution is known as income statement. Generally, what are the financial statements of NPO? Receipts and payments account, income and expenditure account, and balance sheet. Now here they are asking income statement of a charitable institution is known as income and expenditure account. Income and expenditure account. Option C correct. Next one, 67. Dash is similar to profit and loss account. Income and expenditure account is similar to profit and loss account. So income and expenditure account. Option A correct. Next one, 68. From the following details, estimate the capital as on 31/3/2023. Almost 31/3/2023 means closing capital. Fine. Opening capital 4,10,000. Opening capital 4,10,000. Drawings 40. So drawings are deducted 40. Profit add. So how much you get? 50,460 minus 20, 40, 4,20,000 is your closing capital. No students. Next one. 69. Which of the following items does not match with receipts and payments account? Which of the following items does not match with receipts and payment account? Okay. Receipts and payment account is a summary of cash book. Correct. Transactions are recorded in it on cash basis. Yes. In receipts and payments account, we record based on cash basis. It records revenue transactions only. No. Our receipts and payments account will record revenue transactions plus capital transactions. Revenue transactions plus capital transactions. So it serves the purpose of real account. It serves the purpose of real account. So which is not, here they are asking does not match. Option is correct. Yes or no students? Next one. 70. Income and expenditure account shows subscription 10,000. Income and expenditure account shows subscription 10,000. Okay. Subscriptions accrued in the beginning of the year. Here look at 10,000 rupees shown in income and expenditure account. Subscriptions accrued in the beginning of the year and at the end of the year 1,000 and 1,500 respectively. First look at beginning. Beginning of the year subscription we deduct from income and expenditure account. Why? Because these are relating to previous year. So that now we have to calculate what subscription received appear in receipts and payments account will be. That is 1,000 rupees earlier deducted. Now we add back 1,000 rupees. Next, 1,500 rupees relating to current year outstanding. This amount we will not receive actually. So 1,500 rupees deduct. 1,000 rupees relating to the beginning previous year add. 1,500 relating to the current year outstanding. Now that means we didn't receive any cash. Now, total how much? 10,000 plus 1,000 minus 1,500. 9,500 amount received. 9,500 amount shown on the debit side of receipt. Next, 21. A charitable institution has 250 members with an annual subscription of 5,000. So, what is the total subscription for the current year? What is the total subscription for the current year? 250 into 5,000. Total 12 lakh 50,000. Total 12 lakh 50,000. 250 members into 5,000. Total subscription to be shown in the income and expenditure account 12 lakh 50,000. Subscription received during 2021 11 lakh 25. Out of this, how much amount received? 7 lakh 25. Okay, which include, observe student, 11 lakh 25,000 received now. Okay, which includes 65,000 and 25,000 for the year 2021, 22, 23. 2021 means previous year. So previous year amount simply deduct 65,000 rupees. So 11 lakh 25,000 minus 65,000. Fine. Remaining 10 lakh 1,000. And 25,000 relating to next year. Next year amount also we will deduct because it is not relating to current year. 25,000. So remain 10 lakh 35,000. What is the meaning of 10 lakh 35,000? It is relating to current year. It is, sorry, relating to current year. Actually, current year we have to receive total 12 lakh 50,000 rupees minus how much amount received? Just 10 lakh 35,000 rupees. How much amount still outstanding? 2 lakh 15 lakh 2 lakh 15,000. That's what they are asking. Amount of outstanding subscription for the 2022 will be 2 lakh 15,000. Suppose if they ask how much of amount is shown the income and expenditure account as subscription, then your answer is 12 lakh 50,000. Here they are asking, how much amount outstanding? 2 lakh 15. Is it clear, students? Next one. 72. Opening debtors. Collection from debtors. Discount allowed were 3 lakh 15,000, 18 lakh 30 and 35,000. Okay, it is better to prepare debtor account here. Opening debtors 3 lakh 15. Collection credit side 18 lakh 30. Discount allowed credit side 35,000 respectively. If the closing debtors were 20% of credit sales of the period, then closing debtors and creditors sales will be 20% of credit sales of the period. So let's say the credit sales will be X. 20% of credit sales will be closing debtors. That means 0.x. And your account will be equal. Now look at. Now I am framing one equation from this. So 31,000, sorry, 3,15,000 is their answer. Closing debtors they are asking. Closing debtors and credit sales. Okay, fine. So 3,15,000 plus x is equal to 18,30,000 plus 35,000 plus 0.2x. Then 0.2x here, so that 0.8x is equal to how much? 18,30,000 plus 35,000 minus 3,15,000 divided by simply 0.8. So x is equal to 19,37,500. X is equal to 19,37,500. This is our credit sales. This is our credit sales. First observe whether it is matching or not. Yes, it is matching in option 3. Now they say 20% out of 19,37,500, 20% is credit sales. No? Sorry, closing debtors. No? Yes, 3,87,500. Yes, is also matching. Now option B correct. Observe students. Is it clear? Next one. 73. In case of a club, the excess expenditure over income. Excess of expenditure means debit side is more. Over income is called as deficit. No? So option B correct. Option B correct. 74. Opening inventory 9,600. fine. Purchases less returns 11,850. Salaries, just a minute. Salary 3,200. Okay, here I am drawing an account. Opening inventory 9,600. Purchases returns 18,000 11,850. Salaries, salaries will not show in trading account. Okay, wages 750. Fine. Commission on purchase 200. It is also part of purchase. Carriage outward, it is related to sales. Sales 24,900. Fine. Closing inventory 3,500. Fine. Carriage purchase 1,000 rupees. Fine. Compute gross profit. Okay, simple. Now look at 24,900 plus 3,500 minus 9,600 minus 11,850 minus 750 minus 200 minus 1,000. 5,000 rupees is our gross profit. Observe students, 5,000. Next one. Next one. 75. Find out gross profit or loss. Okay. They are asking calculate gross profit or loss. Here I am preparing trading account. Gross profit or loss means trading account only. Wages 30,000. Sales 15,000. Carriage inward expense 2,400. Opening stock 10,000. Purchase returns 1,000 minus I am writing on the credit side, students. Actually, it should be deducted from purchases, but I am writing on the credit side. Closing stock 36,000. Okay. Calculate 15,000 plus 1,000 rupees plus 36,000. Total 52,000 here. Minus 30,000 minus 2,400 minus 10,000. So 9,600 is your, is it? Yeah. 75th. So 9,600 is your gross profit. Is it clear, students? Yes. Next one. 76. Opening stock 1,50,000, cash sales 1,20,000, credit sales 2,30,000, closing stock nil, selling price 125% on cost. Compute purchase. Simple. See, opening stock 1,50,000. First, you roughly write down the information which they have given in an account format. Opening stock 150, cash sales plus credit sales total 3,50,000. Cash sales plus credit sales 3,50,000, closing stock nil. Okay. And the selling price is 125% on cost. 125% on cost means 25% on cost. 25% on cost is equal to 20% on sales. 3,50,000 into 20% means 70,000. 70,000 is our gross profit. Now calculate 3,50,000 minus 1,50,000 minus gross profit 70,000. So 1,30,000 is your purchase value. 76, 1,30,000 is your purchase value. So option C correct. Option C correct. Now 77. Opening and closing balance of data is 30,000. Okay, here I am removing all these things. Opening and closing data is 30,000. Okay, here I am preparing an account, students. Opening data 30,000. Closing 40,000. Fine. Cash collected from data is 2,40,000. So fataфат you have to write all the information in debtors account. Okay. Discount allowed 15,000 credit for prompt payment. Bad debts 10,000 credit. The total goods sold. Simple. Credit sales they are asking. So 240 plus 15,000 plus 40,000 plus 10,000. 3,05,000 minus 30,000. 2,75,000 is goods sold on credit. 2,75,000. Option 4 correct. If traders net sales amount to 18,000, net sales means sales minus sales returns, and his gross profit 60% of sales and net profit is 40% of sales, his expenses are simple, friends. Observe here. Sales 18,000. Sales 18,000. 60% of sales is gross profit is 60% of sales. So 18,000 into 60% comes 10,800. And the same, okay, I will show here. then it becomes 80,000 sales, gross profit 10,800. The same gross profit is carried to the P&L account. Yes or no, students? Yes. Now what they are giving? Net profit is 40% of sales. They are saying net profit is 40% of sales. Okay. So net profit is 18,000 into 40% of sales, 7,200. Now they are asking what? Expenses. Is asking about expenses. Simple. 10,800 gross profit. Net profit 7,200. 10,800 minus profit. So expenses are 3,100. Very interesting question, no? Very interesting question. Concentrate. Okay, next one. 79. A firm had a capital balance of 1 lakh at the beginning of a year. Okay, at the end of the year, the firm had total assets 1 lakh 50,000. Okay, and total liabilities 70,000. So assets minus liability will get capital, na? So closing capital is equal to 1 lakh 50 minus 70, 80,000. Total withdrawals during the year 30. What was the net profit? So closing capital 80, drawings 30,000. Add closing capital. How do you calculate closing capital? Closing balance of assets minus liabilities. We are giving the ender 1 lakh 50 assets to 70,000 liabilities. Remaining 80,000 rupees is closing capital. Drawings add back 1 lakh 10,000. Opening capital 1 lakh. So remaining profit is 10,000. So profit is 10,000. So option 1 correct. Next 18. Which of the following is fixed asset? Fixed asset. Plant and machinery, yes, fixed asset. Stock, not fixed asset or current asset. Stock, debtors, cash, current assets. Not. So which one is correct? Plant and machinery. 81st. A trial balance as at 31st December contains the following information. Trial balance contains this information. 12% bank loan 50,000. Interest paid 3,800. Interest debited to P&L account is okay. Simple. 50,000 is loan. On that 12% interest we have to pay. So total interest for the year. If debt is not given, assume this loan is outstanding from the beginning of the year. So 6,000 rupees, but interest paid only 1,800. Still outstanding how much? 2,200. Now they are asking interest debit to P&L account 6,000 rupees. Now interest debit to P&L account 6,000, whereas 2,200 rupees shown on the liability side of balance sheet as outstanding interest is 81. Now 82nd, 82. Next 82nd question, friend. The closing capital of Mr. X 31st 3 4 lakhs on 1/4/2022 opening capital 3 lakh. His net profit 1 lakh. He introduced 30,000 as additional capital. Find out the amount drawn. Simple. So drawings is equal to opening capital 3.5 lakh less additional capital 30,000 less 1 lakh profit minus closing capital 4 lakhs. Drawings 80,000. Don't forget the fundamental equation, that is not assets is equal to liabilities plus capital. In case of incomplete accounts, we have fundamental equation, student. Don't forget the fundamental equation like opening capital, yeah, minute, closing capital less, sorry, closing capital is equal to opening capital less additional capital less net profit minus. This is fundamental equation. Closing capital is equal to open capital plus additional capital plus net profit minus drawings. Now, if you from this equation you can calculate whatever you want. If you want net profit, then you can calculate change the equation. If you want drawings, here now we need drawings. No. Drawings is equal to opening capital plus additional capital plus net profit minus closing capital. Don't forget this equation. Next one. 83. In case of a club, the excess of expenditure over income is deficit. It's a repetitive question, student. Next one. Donation received for a specific purpose is known as donation received for a specific purpose. So it is capital receipt. It is not asset. It is not, yeah. So it is a capital receipt. Yes, no students. Next, 85th. So okay, 84. Donation received for a specific purpose is, it is not asset, liability, revenue receipt. It is a capital receipt. But shown on the liability side of balance sheet. Specific purpose now. Shown on the liability side of balance sheet. It is not liability. It is shown separately. Okay, it is a capital receipt. 85th. Which of the following account is mainly prepared at the time of dissolution? See, at the time of dissolution, we prepare realization account. Don't get confused. It is not revaluation account. It is realization account. So which option is correct? D is correct. Next one. 86. X and Y are partners with the capital of 50,000 and 30,000. Okay. Interest payable is 10% per annum. Interest payable is 10% per annum. The profits earned by the firm 4,800. What will be the interest on capital for X and Y? First, you calculate interest on capital. So both put together 80,000 into 10%. We need to pay capital of, sorry, interest of 8,000 rupees. But whereas we have capital 4,800. In profit 4,800. Students, total interest payable 1,000 plus 30,000, 80,000 capital into 10%, 8,000 rupees. Whereas we have 1,800. In case of insufficient profits, profits are less than the interest to be provided. In that case, the available profit is distributed among partners in their capital. The fundamental rule. So capital ratio is how much? 5 is to 3. 4,800 into 5 by 8. 3,000 rupees to 8 and 1,800 rupees to 5. So 3,000 and 1,800 is the correct option. Is it clear, students? Next one. 87. X, Y, and Z are partners in the ratio 3 to 1. W is admitted with 1/6 share in the future profits. W is admitted for 1/6 share in the future profits. Z would retain. Z would retain his original shares. Z would retain his original shares. Means 1 by, at present, what is the Z share? 1 by 6. The share 1 by 6. Okay. Find the new profit sharing ratio of partners. Find the new profit sharing ratio of partners. Observe, student. So what is the old ratio? 3 is to 2 is to 1. Old ratio is 3 to 1. Okay. Now here we are giving 1 by 6 and 1 by 6. 2 by 6 share. 2 by 6 shares. To whom? New partner. New partner W, at the same time Z also. Z also. Now what is the remaining source? Okay, here I will calculate. So 1 minus 2 by 6. What is the remaining share, students? 8 by 6. Sorry, 4 by 6. Let the total share will be 1. Out of that, we are giving 1/6 share to B and 1/6 share to Z. Total 2 by 6. So what is the remaining share? 4 by 6. This 4 by 6 share is taken by X and Y in 3:2 ratio. So 4 by 6 into 3 by 5 and 4 by 6 into 2 by 5. How much, students? 12 by 30, 8 by 30. And what is Z share? 1 by 6. So equal denominator, multiply and divide with 5. So 5 by 30. And what is the share of W? 1 by 6. Multiply 5 by 5. Two equal denominators. So 5 by 30. So what is new profit sharing ratio? 12 is to 8 is to 5 is to 5. So which option correct? Option 2 is correct. Observe. Is it clear, students? Next one. In this case, let the total share be 1. Let the total share be 1. Out of that, how much share we are giving to value 1 by 6? And they are saying Z will retain his old share. Old share is how much? 1 by 6. So W 1 by 6, Z also 1 by 6. Total share 2 by 6. So out of total share of 1, we are giving 2 by 6 to W and Z. What is the remaining share? 4 by 6. This is taken by whom? This is taken by whom? X and Y. What ratio? 3 is to 2 ratio. So you do the calculation. Next, 88. A and B are currently partners in a firm sharing profits and losses in the ratio of 4 is to 3. Fine. A new partner, a new partner C is admitted, and after his admission, new profit sharing ratio between A, B, C and becomes 5:3:2. Okay. What will be the sacrificing ratio of A and B after admission of C? So we use the formula. Sacrifice ratio formula is what? Old ratio minus new ratio. What is the old ratio here? 4 by 3. And sorry, 4 by 7 and 3 by 7 minus. What is the ratio, new ratio of A? 5 by 10. Here also, here 3 by 10. Now tell me, how much? 70, na? So 10 4 ja 40 minus, we get 5 by 70. Here also 70. 7 10 ja 10 3 ja 30 minus 7 3 ja 21. 9 by 70. So finally, what is the sacrificing ratio? 5 is to 9. Okay, A option is correct. 5 is to 9. Option 1 is correct. Option 1 is correct. Is it clear, students? 89. The share of profit or loss of partners in absence of oral or written agreement will be equal. The share of profits or losses of partners in the absence of, see, in the absence of partnership deed, or any provision is not mentioned in the partnership deed, then we have to look at partnership act. Partnership act is you have to share profits and losses equally. So option 1 correct. 90. In absence of specific provision in the partnership deed, at what rate of interest on capital? They are asking about interest on capital. There is no interest on capital of the partners would be allowed. No. Okay. In absence of specific provision in the partnership deed, at what rate of interest on capital of the partners would be allowed? Actually, there is no interest on capital, student. Maybe it is by mistake. This is interest on loan. You may correct it. Interest on loan. Partnership Act says there is no interest on capital in the absence of partnership deed. But if any partner have advanced, if any partner has advanced some amount to the partnership, then he is eligible to receive 6% interest on loan. Make a correction, it is interest on loan. So if it is interest on loan, then option E is correct. 91. Average profit 3,72,000. Normal rate of return 12%. Total assets 68 lakh. Outside liabilities 42 lakh. First you calculate net asset or capital employed. 68 lakh minus 42 lakh. You get 26 lakh capital employed. Yes or no, students? Calculate the value of goodwill under capitalization method. Simple. What is the average profit? Like 72,000. To earn this average profit, how much of capital we should employ actually? To earn average profit, how much of capital we should employ? Simple. 3,72,000 divided by 12%. 31 lakh. 31 lakh capital you should employ. 31 lakh capital you should employ actually to get 12% normal rate of return. But how much capital you have employed? 26 lakh. So 31 lakh minus 26 lakhs. How much capital you have saved? 5 lakhs. And this 5 lakhs is treated as your goodwill. And the same can also be calculated under super profit method also. Average profit 3 lakh 72 and calculate normal profit. Normal profit is nothing but capital employed 26 lakh into 12%. 3 lakh 12,000 minus 3 lakh 72,000. How much is super profit? 60,000. To earn this super profit of 60,000 at the rate of 2%, how much capital you should invest? 5 lakhs. So the correct option is 1. Next one. 92. The profits of last 3 years 42, 39, 45. Find the goodwill 2 years. Simple. So use simple average. 42,000 plus 39,000 plus 45,000 divided by 3. Average profit 42,000 into 2 years purchase 84,000. Option 2 is correct. 193. Excess of average profit earned by firm over the above its normal profit is called super profit. Super profit is equal to average profit minus normal profit. We get super profit. Next one, 94. Which of the following should be valued compulsorily at the time of admission of a partner? Goodwill. Goodwill is compulsorily valued not only at the time of admission, retirement, death also. Okay, goodwill. So option 1 is correct. 95. X and Y share profits and losses in the ratio of 4 is to 3. Okay, they admit Z for 3/7 share, which he gets 2/7 from X and 1/7 from Y. The new profit sharing ratio will be simple. Now, first calculate how much remaining share will X and Y have. So, X old share 4/7. Out of that, he sacrificed 2/7. So, what's the remaining share? 2/7. Y share 3/7 earlier minus how much he sacrificed 1/7. So, remaining share 2/7. That's it. Okay. And Z share is 3/7. Fine. So, what is the ratio here? Yes, students. So, what is the new share of Z? 3/7. Now, what is the ratio? 2 to 3. So, option B is correct. Yes, sir. So, earlier share of X 4/7. From that, he sacrificed 2/7. Remaining share 2/7. Like that, Y also. So, Z share is 3/7. Total 2 to 3. Next one. 96. A, B, C, and D are partners sharing their profits and losses equally. Okay. They change their profit sharing ratio to 2 to 1 1. Either 1 1 1 1. Now, new 2 to 1 1. How much will C sacrifice? Sacrificing ratio formula old minus old ratio 1 by 4, because equally na 1 by 4. New ratio of C 1 by 2 to 5, 2 to 4, 5, 6. So 1 by 6. Now, what is the LCM? 24. So 6 minus 4, 2 by 24 or 1 by 12. So which is correct? Option B correct. 1 by 12 sacrificed by C. Next one, 97. X and Y are partners in a firm with capital of 18,000 and 20,000. X and Y are partners in a firm with capital of 18,000 and 20,000. Okay, Z was admitted for one third share in profits and brings 24,000 as capital. Calculate the amount of goodwill. Simple. Here, here we calculate hidden goodwill, student. Why? Because X share is given, Y share is given. Z got 24,000 as capital for one third share. That means what is the total capital? What is the total capital in the firm? Into 24,000 into 3, reciprocal of his share. 24,000 into reciprocal of his share, 3 by 1. So total capital must be 72,000. So 24,000 into 3 by 1. Total capital must be 72,000. Total capital must be 72,000. 72,000 total capital. But what actual capital we have? 80,000 plus 20, 38,000 plus 20,000 he brought. Total 62,000. Actual total capital must be 72,000 as per that share. But the total capital is just 62,000. So what is the difference? 10,000. So 10,000 is nothing but your firm's goodwill. So he brought extra capital now. So 10,000 hidden capital. Sorry, hidden goodwill. We call it hidden goodwill. Next one, 98. A, B, and C are partners sharing profits equally. Fine. A retained and goodwill appearing in the balance sheet 3,000 is valued at 6,000. Actually, present goodwill is how much? 3,000 is valued at 6,000. A will get credit of, first of all, 3,000 rupees. 3,000 rupees you distribute among partners first. 3,000 rupees distribute among partners. Here I am talking about only A because they asked A, no? So A account. If 3,000 is distributed to A, then what is this capital account gets debit by 3,000 rupees. Sorry, 1,000 rupees. Because old goodwill we have to cancel. For that, what is the entry we record? A capital account debit, B capital account debit, C capital account. Now the goodwill is valued at 6,000 rupees. Out of this 6,000 rupees, how much is A's share? 2,000. So now we credit 2,000 rupees. Now you tell me, only A account is credited with how much? Finally, A account is credited with 1,000 rupees. What is the difference? 1,000. So finally, A account is credited with 1,000 rupees. Yes or no, student? Next one, 99. A, B, and C are partners with capitals of 1,75,000 and 50,000. 1 lakh 75 and 50,000. On C's retirement, his share is acquired by A and B in the ratio of 6 is to 4. Okay, respectively. Calculate gaining ratio. Simple. Capitals. Okay. On C's retirement, his share is acquired by A and B in the ratio of 6 to 4, respectively. Calculate gaining ratio. Gaining ratio is nothing but 6 to 4 in only. They have taken 6 to 4 ratio. Na? So the gaining ratio will be 6 to 4 or 3 is to 2. Option 1 is correct. Observe, students. Next, 100. 100. Century, students. A and B, A, B and C are partners sharing profits in the ratio 2 to 1. On retirement of B, goodwill was valued at 30,000. He is retiring. What is his share of goodwill? First calculate. 30,000 into 1 by 5. That is equal to 6,000. No, 2 by 5, no? 2 by 5, that is 12,000 rupees. 12,000 rupees is the share of goodwill of B. Find the contribution of A and C to compensate B. So, the gaining partners will compensate goodwill to sacrificing partner. Yes or no? Here, who is the sacrificing partner? So, the sacrificing partner, we should calculate sacrificing ratio. To calculate sacrificing ratio, we need old ratio minus new ratio. Here, old ratio is given, but new ratio is not given. In the absence of any new ratio, from this information, we consider the new ratio will be exclude exclude B share. Exclude B share. What is the remaining share? 2 is to 1. We consider this as new share, and the same 2 is to 1 is considered as gaining ratio. Is it, students? Yes. Specifically, they are not giving in this ratio, they are taking the share of B. We assume the existing share will be new share, and the new share will be as gaining ratio. Okay. This is the goodwill 1,000 into 2 by 3. So 8,000. So 8,000 is brought by 8,000 will be compensated. 8,000 will be compensated by A and 4,000 will be compensated by C. So what is the ratio here? Yes. Option 2 is correct. Option 2 is correct. Next. Not 1. A, B and C are partners sharing profits and losses in the ratio 2 to 1. A, B, C are partners in 2 to 1. C died on 31st March 2022. He died on 31st March 2022. The profits of the financial year ending 31st March 2022, 64,000. He died now, so he is eligible to receive share in the profits. The share of deceased partner's share will be simple, 64,000 into 4,000 into C share 1 by 5. 1 by 5. So 12,800. His share will be 12,800. Option 2 correct. 1 or 2. When goodwill is withdrawn by partners dash account is credited. So when goodwill is withdrawn by partners dash account credited, cash bank account. What is the entry? Partner capital account debit to cash or bank account. So cash or bank account is credit. So option 1. 103. When goodwill is to be written off after admission of a partner. When goodwill is to be written off after admission of a partner, in which ratio it is transferred to capital account of partners? New profit sharing ratio. Because admission of partner, any goodwill is there in the balance sheet, then we write off with the old profit sharing ratio. When new partner is admitted, after admission of partner, if we want to cancel write off the goodwill, then we write off goodwill to profit sharing ratio. Sacrificing, no. Equal, no. Profit sharing ratio, yes. Old profit sharing ratio, no. Is it, students? Got a question. Next, Section 32 of the Indian Partnership Act 1932. Partner may retire. Yes, a partner may retire with consent of all partners. Okay, with the consent of all the existing partners. Yes, in accordance with an express agreement by partners. Yes, by giving a written notice to all partners of his intention to retire in case of partnership at will. Yes, all the three options are correct. So option 4 is correct. Option 4 is correct. 105. Advertisement expenses are apportioned among departments in the portion of. See, this is departmental accounting. Advertisement expense incur for sale purpose. So, this expense we apportion among the departments on the basis of turnover of sales. So sales of each department, purchase, no, number of units sold, no, cost of, yes, sales of each department, turnover of each department. Next, which one is or method of accounting for branches? We have three methods for accounting branches. One is DAS method, second one is stock and debtors method, third one is final accounts method. So final accounts method, yes, debtors method, yes, stock and debtors method, yes, all the above, yes, correct. Three methods, no? Next, one not seven. Bad debts are apportioned among departments in the proportion of same sales. Bad debts also apportioned on the basis of sales. So sale of each department. Yes or no, students? Right. Goods are transferred from department X to department Y. Okay. Internal transfer, yet departmental transfer also. At a price as to include a profit of 33 1 by 3 on cost. But 1 by 3 on cost. If the value of closing stock of department Y is 48,000, then the amount of stock reserve on closing stock will be, because it is a departmental interdepartmental transfer, so we have to eliminate the profit at the end of the year in the form of stock reserve. Now to calculate, 48,000 is the closing stock value of Y. So 48,000 includes profit. Okay, profit is added 33 1 by 3 on 33 1 by 3, that means 1 by 3 on cost equal to 1 by 4 on sales. So 48,000 divided by 4 means 12,000 rupees. 12,000 rupees is the stock reserve. Yes or no, students? Observe carefully. Is it clear? Next, 109. Goods are sent to branch at cost plus 25%. Cost plus 25% is equal to loading on invoice price. The loading on invoice price is nothing but 20%. 20%. See, most of the students they get confusion, sir. How these are formulated? Simple, student. Simple. Look at it. Suppose profit. How the profit is expressed? Profit is expressed 25% on cost. In this case, cost is equal to 25. Sorry, 100. Cost is 100. Profit is 25. Then what is the invoice price? 125. Invoice price is 125. Yes or no, students? Now, here profit expressed as a percentage of cost. Now, here I am taking profit as a, just a minute, percentage on sales. Then what is the formula? Simple. Profit divided by sales into 100. Now look at here. Profit is how much? 25. Sale is how much? 125. That is into 100. That comes around 25 by 125. 20%. Yes or no, students? So that is the reason why 25% of cost is equal to 20% of sales. Is it clear? Yes, that's the reason, student. Next one. Then 20% on invoice price. That's the final answer. 110. In hire purchase system, cash price plus interest is known as simple hire purchase price. What is that? Hire purchase price of asset. Option 3 correct. Option 3 correct. 111. Excess of hire purchase price over cash price is known as simple. In the above question, what is that? Hire purchase system, cash price plus interest is equal to hire purchase price. So hire purchase price is equal to cash price plus interest. Now what is asking? Excess of hire purchase price over cash price is equal to interest. So interest is equal to hire purchase price minus cash price. Excess of hire purchase price over cash price is nothing but interest. Yes or no, students? Yes. So option 3 correct. 112. KCS purchased a machine from JPS on hire purchase system. Okay. Cash price 8,64,000. 2,60,000 being paid on delivery, that is down payment, and balance in 3 annual installments of 88,000 each. The amount of interest included in installment will be, this is very, very, very important question, student. You may expect this question in the exam. In this question, they didn't give any interest. Yes or no? Yes. Here, our assumption is each installment is 2,88,000. Each installment is 2,88,000. First, you calculate higher purchase price. In this type of question, first you have to calculate higher purchase price. Higher purchase price is nothing but cash price less installment, or interest, or down payment plus total installments. Total installment also you can write. Look at, students. Look at. So what is the down payment here? We are paying 2,16,000 plus installment 2,88,000 into 3, so 8,60,000. So total purchase price is 10,80,000, student. Total higher purchase price is 10,80,000. To calculate interest portion, interest is equal to higher purchase price minus cash price, like 60. Then what is the total interest? 2,60,000. Yes, no, students. Total interest is 2,16,000, and this total interest is apportioned in 3 installments. That is 3 is to 2 is to 3 installments. This interest is apportioned in 3 installments. Yes or no, students? Yes. They are asking interest included in first installment. First installment is nothing but, second installment is nothing but 2, third installment 1. Now 2,16,000 into 3 by 6, that is 1,08,000, student. Option 3 correct. This is very, very important question. Is it clear? Next one. If you want, you can repeat the question once again. Okay. 113. Head office invoiced goods to its branch at 10% less than the catalog price, which is cost plus 20%. Is cost plus 20%. Now, what is your catalog price? Tell me. Suppose cost is 100, your profit is 20, then it is 110. Catalog price is 110. Your catalog price is 110. Now, head office is invoicing goods at 10% less than the catalog price. Now, catalog price is 120. No? Catalog price is 120. Catalog price is 110. 120. 10% less means 12 rupees. So what is the value that head office is sending goods to branch? 108 rupees. At what price? 108 rupees. Fine. If the total invoiced goods during the year 4,32,000, then cost of such goods is very simple, students. When I am sending 108 rupees worth of goods to branch, then what is my cost? 100. 100. Now I am sending 4,32,000 worth of goods. Then what is my cost? 432 into 100 by 108. Cross multiplication. 4 lakh rupees. 4 lakh rupees is our cost. Yes or no, students? Very, very important question. Very important question. So option A. Option A correct. Option 1. Observe, student. I repeat again. Look at. In head office sending to branch at 10% less than catalog price. How much is catalog price? Catalog price is nothing but cost plus 20%. Let cost be 100. Then what is the price? Profit 20%. Then total 120 is your catalog price. On catalog price they are sending 10% less. 10% means 120 into minus 12. So 12 rupees. Sorry, 120 into 10%. 12 rupees. Now at what price they are sending? At 108. So for 108 rupees at selling value, then what is the cost? 100. Then for 4,32,000, then what is the cost value? 4 lakhs. Profit 32. Is it clear, students? Next one. 114. Goods are sent to branch at cost plus 50. Goods are sent to branch at cost plus 50. Cost plus 50 means 1 by 2. 1 by 2 on cost. 1 by 2 on cost is nothing but 1 by 3 on sale, or 33.133%. Loading on the invoice price will be 33.33% student. This is a repetitive question. I think already we got this. Next one, 11. The head office of a company sends goods to its branch at 150% of cost price. 150% of cost price is nothing but 50% on cost. 150% of cost price is nothing but 50% on cost. The value of goods received. If the value of goods received by branch is 7,50,000, then cost of goods will be very simple. 50% on cost, nothing but 1 by 3 on sales. 7,50,000 divided by 3, 5 lakh. 2,50,000 is profit and 5 lakhs is goods value, cost value. Hope you understood, friend. Next one, question 16. Goods costing 2 lakhs. 2 lakhs cost of goods were, this is not view, were insured for 1 lakh. Actually, the cost of goods are 2 lakh, insured for 1 lakh only. Insured for 1 lakh, out of which 3/4 were destroyed by fire. Out of which 3/4 were destroyed by fire. Calculate amount of claim with average clause. Average clause. Observe students, we have 2 lakhs worth of goods. Out of that, 3/4 goods were destroyed. 2 lakhs, 3 by 4. That means 1,50,000 worth of goods were lost. 1,50,000 worth of goods were lost. But goods insured less than the original value, na? So that we apply average clause. Simple. How to apply average clause? First, average clause. First, take insured value 1 lakh into how much of goods lost 1,50,000 divided by total value of goods we have 2 lakhs. Now calculate 1,50,000 divided by 2 lakhs to 1 lakh. 75,000. Now we get claim only for 75,000 students. Because discourage the undervalue of goods or under insurance, we apply average clause. What is the formula for average clause, students? First you write, put it simple. First you write the insured value, insured amount 1 lakh. Two, how much of goods lost? 1,50,000 divided by total value. Next one, 117. A plant worth 80,000 has been insured for 60. Actually, cost is how much? 80. But they insured only for 60. At the time of insurance, the value of plant will be 60. Why? Because if we say 80,000, the premium will be more. Cost is more. If the amount to be insured is more, then automatically premium also will be more. So the loss on account of fire is 50,000. Same apply. The insurance company will bear the loss to the extent of, simple formula. How much of goods, how much of asset cost? 50,000. So for how much it is, sorry, just a minute. What is the insurance amount? Insured value 60. So how much plant lost? 50,000 divided by what's the total cost of plant? 80,000. So how much of amount insurance company will pay to insured? So 60,000 into 50,000 divided by 80,000. 37,500 rupees will be paid by insurance company to the business. 37,500. Option A. One correct. Next one. Standard turnover is. This is also from insurance claim. Standard turnover. See, standard turnover is not nothing but 12 months time period. 12 months time period. But how do you calculate this 12 months time period? That is very important, student, to get. Turnover during last 12 months immediately before the damage? No. Turnover during that period of 12 months. Okay. Immediately before which corresponds with indemnity period. Yes, this is the correct option. So go and refer the standard turnover. Once again, you find this answer. Option 2. Next one. Departmental accounting helps in. Departmental accounting helps in evaluation of trading result of each department separately. Yes, correct. Effective planning and control on each department. Yes, correct. Both 1 and 2. Yes, both 1 and 2 correct. Because the departmental accounting helps what? First, we calculate profit from each department. Same time, we plan and control each department also. Next, 120. Department M transfers goods to Department N at a price of 50% above cost. That means 1 by 2 on cost. That is nothing but 1 by 3 on sales. What will be the amount of stock reserve on unsold stock worth of 9,000? Simple. 9,000 divided by 3. 3,000 rupees stock reserve. So maybe you get one type of question from this students department for the calculation of stock reserve. Very, very simple. Very, very simple. Yes, sir. Till now we have seen so many questions on calculation of stock reserve. Easy, students. 121. Hire purchaser records the asset at its hire purchaser records the asset at what value? Cash price. Yes, sir. Because hire purchase includes interest and cash price, but the asset will be recorded at cash price. Hire purchase price? No. Amount paid to the vendor? No. Cash price? Yes. Cash price. Next one. 122. Depreciation on hire purchase asset is claimed by depreciation on hire purchase asset is claimed by hire purchaser because he has the position to use the good. So hire purchaser will use hire purchaser. Next one. 120. While treating the abnormal loss under stock and debtors system. Under stock and debtor system we maintain so many accounts now. Yes. Maintaining branch accounts, loading on abnormal loss is transferred to loading abnormal loss we transfer to which account? Stock adjustment account. Yes or no? So branch stock adjustment account. To this account we transfer loading. Is it clear? Next 124. Under debtors system of maintaining branch accounts, which of the following appears in branch account? So which of the following appears in branch account? Credit purchase will not appear in branch account. Goods returned by debtors to branch. Goods returned by debtors to head office. This also will not appear. Goods sent to branch. Actually, goods sent to branch will appear in branch account. Goods sent to branch will appear in branch account. Okay. But in our ICMA, they have given goods returned by debtors to branch. Actually, goods sent to branch will appear in branch account. Or no? Yes, students. So here there is a little bit controversy. Okay, knowledge. But after my knowledge, the answer is goods sent to branch. This will appear in branch account because I said exclusively goods returned by debtors will not be recorded in debtors account. That means branch account. Clear. Next one. Goods sent to branch we record. Next 125. Branches not keeping full system of accounting are called. Branches not keeping full system of accounting are called dependent branches. Yes or no, students? So dependent branches. 126. Assets are generally repossessed at a mutual agreed value. In case of default by the hire purchaser, the hire vendor will repossess the goods. At what value? Mutual agreed value, not at current price or installments due. Mutual agreed value. 127. CP points sells computers on hire purchase basis at cost plus 25%. Cost plus 25%. Terms of sales are 10,000 down payment, fine, and 8 monthly installments of 5,000 each. Okay, first calculate hire purchase price. Hire purchase price is nothing but down payment 10,000 plus 8 monthly installments. So 5,000 into 8, 40,000. Then what is total hire purchase price? 50,000. They are asking. Compute the hire purchase price per computer. So 50,000 rupees. How much? 50,000 rupees. 8. Yes or no, students? Yes. Next one. 128. On 1st April 2022, a car company sold to A Brothers a motor car on hire purchase basis. Okay. Total hire purchase price is 4 lakh 60. They are giving total hire purchase price with down payment 1 lakh 60. Balance amount was to be paid in 3 annual installments. 3 annual installments of 4 lakh each. First installment payable on 31st March 2023. Cash price 4 lakhs. Compute interest for second year. You observe in this problem they didn't mention rate of interest. So that in that case what we first step calculate higher purchase price. Calculate higher purchase price. They are giving higher purchase price. 60. Second step. Second step. Calculate cash price. Calculate cash price. Yeah, cash price is equal to 4 lakhs. Third step. Calculate interest. How much? 60,000. This 60,000 interest we have to apportion among installments. Total how many installments we have? 3 installments. How many installments? 3 installments. Means 3 is 2 is 2. Now they are asking, interest on second installment. Interest on second year means second installment. Simple. How much? 60,000 into 2 by 20,000 rupees. 20,000 rupees interest is there in second installment. Observe that. Very, very important question. We can expect this question in the exam. So follow steps. First step, hire purchase. Second step, cash price. You get interest. This interest we have to apportion among installment. How many installments? 3 installments. So 3 is to 1. Suppose if we have 4 installments, so 4 is to 3 is to 2 is to 1. This is a simple trick given by ICMA. So look at interest is 20,000. Hope you understood, students. Next one. 129. In January, a firm took an insurance policy for 60 lakh, okay, to insure goods in its godown against fire, okay, subject to average clause. On 7th March, a fire broke out, destroying goods costing 44 lakhs. Stock in godown was estimated 80 lakh. Actually, the godown we have 80 lakh stock. They have taken policy only for 60 lakh worth of stock. Now, compute the amount of insurance claim. Here, average clause will apply. So, what is the process I have said? First, write down the insured amount. Insured amount is 44 lakh into, this is how much? Just a minute, not 44 lakh, 60 lakh. Taken for 60 lakh, na? Into how much goods lost? 44 lakh. But actually, how much stock we have in the godown? 80 lakh. Then, for how much amount we get policy claim? First, 44 lakhs divided by 80,000, we get a fraction, multiply with 60 lakhs. So, we get 33 lakhs as insurance policy. Yes, sir, students. Sometimes in the exam, during the examination, we forget the formulas. That's why try to remember simple steps. First, write down the insurance amount. After that, second, goods destroyed. After that, third, total goods. Here, next one, 130. Accounting standard in India are issued by nothing but ICAI, the Institute of Chartered Accountants of India. The Institute of Chartered Accountants of India will do accounting standards. Next one, as per AS 10, property, plant and equipment of an enterprise holding investment properties should value investment property at what price? Cost method. Yes or no, students? So value as per AS, we value cost model by using cost model. Okay, using cost model. Next one, 132. As per AS 16, nothing but borrowing cost. All of the following are qualifying assets except manufacturing plants and power generation facilities, inventories that require substantial period of time, assets those are ready for sale, none of the above. You observe, as per AS 16, assets those are ready for sale are not qualifying asset. They are ready for sale, no? They will not take as qualifying asset. 133. All of the following costs are excluded. All of the following costs are excluded while computing value of inventories except. Look at selling and distribution cost excluded. Allocated, okay, abnormal wastage excluded. Next, allocated fixed production overheads based on normal capacity. This must be included. This must be included. Selling and distribution exclude. Abnormal wastage exclude. But fixed production overheads must be included. 134. Which of the following is not a fundamental accounting assumption? Again, it is a repetitive question. Okay, which one? Materiality, consistency, yes. Materiality, no. Going concern, yes. Accrual, yes. So materiality, no. Option 2, correct. 135. As per AS1, disclosure of accounting policy, where a company should disclose its accounting policies, nothing but at the time of preparation of financial statement, notes to accounts, notes to accounts. The annual report, no. Auditor report, no. See letter to the shareholder, no. In the notes to financial statement, yes. This is the correct option. Disclosure of accounting policy. 136. Full form of IFRS, nothing. So be careful. International Financial Reporting Standards, but they give you very similar. So choose one option. Indian Financial Reporting Standards, no. International Financial Reporting Standards, yes. This is correct. Look at second one. International Financial Reporting Standards. Indian Financial Reporting Standard. See here. International Financial actually, but they said financials. Yes or no? Here, Indian Financial Reporting. No. International Financial Reporting. 137. Areas involving different accounting policies by different enterprises is or nothing but what? In which areas we have different accounting policies? Look at valuation of inventory. Yes, in case of valuation of inventory we apply various accounting policies. And treatment of intangible assets, here also we apply various accounting policies. Recognition of profit on long term contracts, yes, here also we use it. So all of the above. In all cases we use accounting policies. 138. An entity has acquired an asset costing 1 lakh for production of certain items, okay, to be sold by it. Okay, it is deductible equally over 2 years in the books of accounts. See, as per accounting, the depreciation, first year depreciation 50,000, second year depreciation also 50,000. This is AS22. Okay, taxes on income. Accounting, as per accounting, the depreciation is allowed 50,000 rupees first year, 50,000 rupees second year. In tax law, is as per tax law, 75,000 rupees deductible first year and second year remaining 25,000. This is the case. As per accounts, first year 50, second year 50. But as per income tax law, first year 75, second year 75. Now they are asking. Situation is like this. Is deductible in first year and balance in second year. Okay, tax rate is 10%. Tax rate is 10%. Now, in the first year, what we have to do? In the first year, as per accounting, the profit is 50. Sorry, deduction is 50. But as per tax, deduction is 75. Here there is difference of profit now. As per accounts, profit increases. As per tax profit decreases. As per accounts, profit increase. But as per tax, profit decreases. Now what we have to do? We have to create, we call it as deferred tax liability. Call it as deferred tax liability. What is the difference of income we have? Difference of income we have 25,000. Difference of income we have 25,000. On that, what is the tax rate? 10%. So we have to create deferred tax liability DT. We have to create DTL 2,500 for the first year. For the first year, we have to create DTL for 2,500. Yes or no, students? Now come to second year. Second year accounting profit how much? 50,000. Whereas tax is how much? 20,000. As per accounts, profit decreases. As per tax, profit increases. Because only 25,000 is debited now. Now here, accounting profit increase. Whatever the deferred tax liability we have created in the previous year, now in the second year we reverse it. Be careful, student. Now what they are asking? In year 2, the entity should, in year 2 what we do? Whatever the DTL we created in the previous year, deferred tax liability to the 500. Now in the second year we simply reverse it. So in the second year, what we do? Reverse of DTL 2,500. The option is correct. Create, reverse, create DTA. It is not DTL, deferred tax liability. Because accounting profit is less. Tax profit is more. You have to create deferred tax liability. Suppose accounting profit less. Taxable profit more. Okay, accounting profit is more, taxable profit is less. Then we create deferred tax asset, right? So second one is correct. Reverse DTL 2500. Next 139. As per AS 22, an example of permanent differences. AS 22 taxes of income, taxes on income, permanent differences. Yes, exempt income, on exempt income there is no tax. Reserved expense, yes. Enhanced deduction, yes. All of these, yes. All of these are permanent differences. Examples of permanent difference. 140. Borrowing cost include. Borrowing cost include as per AS 6. Debenture interest, yes. Debenture is nothing but borrowing. Preference dividend, equity dividend. Preference equity shares we are not borrowing, na. Borrowing is nothing but debentures. So debenture interest only includes as a part of borrowing cost. 141. Grants which are in nature of promoter contribution. Promoter contribution is accounted under capital approach. No, students. So grants which are in the nature of promoter contribution is accounted as capital approach. Here, next one. 142. Most we are going to complete. 142. 10 lakhs grant received for assets. We have received 10 lakhs grant for assets. Life is 10 years. Income credited to profit and loss account every year under deferred income method is, see how much of income we credit to P&L account. It depends on method of depreciation which you are choosing. It depends on method of depreciation which you choose. So which one? Not 1 lakh student. 10 lakh divided by 10. Don't calculate it. Okay, that depends on method of depreciation. So depends on method of depreciation. Option 2 correct. Next 143. According to AS 11 revised, the difference between the forward rate and exchange rate at the date of transaction should be ignored. No, the difference between forward rate and exchange rate we report in the income, recognized as income. Okay, so recognized as income or expense. Recognized as income or expense. Next. As per AS 11, monetary items include. Monetary items are nothing but what? Cash, receivables, payables, like examples. But here they are asking, as per AS 11, monetary items exclude cash included, receivable included, payables included, but inventories excluded. Yes, sir, students. These are the 144 CQ students. Almost it took 1 hour 57 minutes, almost 2 hours. So watch this 2-hour video and get minimum 20 marks MCQ student. Maximum you can get or minimum you get a 20 marks student, or you may answer MCQs based on this knowledge also. Is it clear, students? Yes. So watch the video with 1.5 times speed if you want, or if you feel it is this speed, then you can watch 0.75 speed also. Yes, sir, students. Yes. So in the next video we meet MQP model question paper set 1 and set 2 student. As I promised, till the completion of December 24 exam, subject of financial accounting, I will be with you student. So first level I am recording MCQ. Second I am recording December 24 MQP set 1. Next level MQP set 2. Time permits, I will slowly record revision lecture also. But probably I don't find much time. So but, sure I will record all these things. Is it clear, students? So that's it in this video. We meet again in the next class. Till then, class means next video. So till then, bye bye everyone.